Now, West Africa witnessed its first carbon credit transaction last month. The transaction will allow customers of Volta car rental services offset the carbon footprint of vehicles leased in Ghana, Cote d'Ivoire, and Senegal. Fabrice Le Saché, he's the CEO of Ecosur Afrique, and he joins me now to share his insight into this transaction and the carbon credits market in Africa. Thank you so much, Fabrice, for joining us today. I think a good place to start will be to get some perspective on this transaction itself. Explain this deal to us, because it is indeed groundmaking for West Africa.
Perfect. That's really helpful. Thank you so much.
The idea is to offset the CO2 emissions of a car leasing company in Ghana and offer their clients with a green fleet vehicle offer, a CO2 neutral carbon fleet, so they take care of the environment and they offer their client with this option, this solution, and we provide them with African carbon credits to do this offsetting transaction.
All right, you've been involved in carbon credit transactions in Africa. Of course, this is the first relating to West Africa, but in your view, where is the biggest interest in terms of the carbon trade in Africa right now? Where are we seeing the most transactions located?
So maybe let's give me some context. Carbon credits transaction and commodity market is structured with exchanges from south to north. So in the history, in the last 10 years, all the carbon credits from Africa were sold mostly in Europe, which is the main market on the buying side for carbon credits. As you may know, the demand from Europe is driven by the European emissions trading scheme and by state purchase. So what we try to do now is to build a market within Africa for African carbon credits. That means, in operational terms, that we generate emission reductions in Africa, we certify these emission reductions into the Clean Development Mechanism scheme from the UN or other scheme, that turns these emission reductions into carbon credits, and we sell these carbon credits to African corporates that need them not to comply with legally binding targets, but need them to implement CSR programs, or that wants to have a premium offer for their client. To be very concrete, in Eastern Africa, we offered an hotel network to offset the CO2 emissions of their clients with carbon credits from a Mauritius solar PV farm or from an hydro project in Madagascar. So this hotel chain charged their client with €1 per night. It's an option, and with this money they invest in energy efficient equipments, so it drives their carbon emissions down in the medium and long run, and on the other side they offset their CO2 emissions with our carbon credits.
From the way I understand it, it's all about making investments in renewable energy, energy efficiency, waste treatment, things like that. So if I was a CEO in Africa right now trying to make a new investment, can you just explain the incentive to get into this type of transactions? Why should I be focused on this? What can I gain back?
So let me be very clear about this carbon credit story. Carbon credits do not contribute to financing of the project. Carbon credits are only an additional layer of revenues once projects are commissioned and they are operating. That means that indirectly it contributes to the financing, because if you have an extra layer of revenue, it's easier to raise debt or to raise equity. Of course, it increases the internal rate of return of the projects, and that's the idea, to foster the deployment of green technologies into developing countries, especially in Africa.
How big is the trade globally? How far have we gone since the Kyoto meeting, the Kyoto Protocol?
In fact, at a global scale, carbon credits markets was $1 billion market, mainly driven by the demand from the European Union, and on the supply side by China, India and Brazil, that produced most of the carbon credits in the market. And this oversupply has created, of course, a huge excess of supply, and the market price collapsed to nearly 0.50 euro cents since more than a year and a half now. So we have to change a bit the patterns of how we act in this market. We are not looking to sell our carbon credits assets into the compliance market anymore because there is just no value there. And we have to create added value through the voluntary market. The voluntary market is entities that purchase carbon credits on a voluntary basis because they think that climate change issue is still there. It's not because the market price is low that there is no more climate change issue. So you have always people that give value to the CO2 emission reduction. For instance, the cooperation agency, the international institutions, some corporates, some individuals, foundations, and we try to build this demand, to generate this demand, and then to drag this demand into Africa.
All right, I'm going to give you a chance to sell some business here if you can. Can you just explain how the lay businessman, if you like, in Africa can take advantage of this? I mean, where does he go? What does he think about as he's constructing a new factory or a new project on the continent?
Okay, just very few data first about Africa, and we can go into real business case. Just to make a long story short, the global carbon credits project represents 7,500 projects worldwide. Only 3% of this amount are registered from and in Africa, and only 1% of the carbon credits issued are from Africa. So Africa is quite far away from carbon markets, but the dynamic of the last 2 years is positive. There are lots of development and lots of opportunities. Contrary to what most people think, there are lots of opportunities to reduce CO2 emissions in Africa. I speak about renewable energy projects, off-grid, on-grid, hydro, solar, biomass, and many others, geothermal energy, for instance, fuel switching coal, gas to renewables, for instance, base of the pyramid, bottom of the pyramid technologies for the population, solar kit, efficient cooking stoves, water filter, all these technologies, waste treatment, all these technologies reduce CO2 emissions and thus can generate carbon credits. And our job at Ecosur Afrique is to support, is to help African companies to register their emission reduction into the UN, to receive carbon credits and to monetize these carbon credits into the international markets.
Right. Speaking to some analysts several years ago, there was a view that, you know, trying to pay attention to climate change for a typical business person means more expense, more time. But now you've mentioned changing technology. Is that still the case? Is it more expensive to focus more on climate change when you're building a factory or a production plant?
Look, first of all, there is a cost of not doing anything regarding climate change. The consequences, and I won't be long with this, are already there. It's a challenge for most of the African countries. You have internal migration due to the global warming and the modification of agricultural soil. You have the problems of fossil fuel, of deforestation, of water scarcity. So it's really concrete for Africa. It's not a luxury, it's not business, it's not an idea, an academic idea, it's really concrete. So you need to do something about it, otherwise the liability will increase, and the future cost of consequences can't be handled. So in the short run for businesses, industries, climate change is an opportunity because they can rethink the way they produce. And rethinking this pattern, they can make economy of scale, they can look at new technologies because lots of technologies have costs that have been slashed. And at the moment, in Africa, we see many solar technologies, for instance, small kits, micro installation, or even solar PV plants, power plants, that are emerging because this technology has slashed down cost. So the capex is not the same than 1 year ago. And you need to always look at the technology improvements because the price is always changing. So most of the industries in Africa are not maybe completely aware that the way they supply their own energy with diesel generators and so on and so forth is much more costly in the short run, in the medium run, in the long run than renewables. And plus the fact that it's not only about quantitative cost, it's about qualitative impacts. You don't have exposure in the oil markets, you don't have exposure, you have supply stability and security with renewables.
have less than a minute here to wrap this up. So what's the role of the government in all of this? There's so much pressure on the governments to deliver jobs, to deliver growth in economies in Africa. Your thoughts about how the role that they must play in paying attention to the environment?
I think you can create tremendous jobs with this mitigation, CO2 mitigation projects. You don't have to opposite environment, social. It's completely linked. It's sustainable development. Sustainable development is social pillar, it's environmental pillar, and it's also economic growth. So both are mixed. I think climate change and new technologies like this bottom of pyramid technologies, you can create local factories for this product. I take just a simple example. As Ecosur Afrique, we have an investment vehicle and we already are erecting efficient cooking stove factory in Kinshasa and in Abidjan. In Kinshasa, it's more than 30 people jobs creation, direct jobs, workers and qualified jobs. And in Abidjan, it's 15 people. So we have hired 45 people. And the product they are manufacturing help the population. It's efficient charcoal cooking stove. So it decreases the use of charcoal, it decreases the deforestation and the CO2 emissions, and it generates carbon credits for us. And we sell these carbon credits, and these carbon credits, money, revenue, help us to scale up the projects. So it's a kind of circle that is positive.